Mike Mayo, I want to talk to you about your own TikTok of sorts, the timing of some of your notes today as we got news out of this meeting from JPMorgan, because you had one sort of pre-event, which was, very bullish, obviously. But then midday, you put out a new note which talked about JPMorgan guiding the markets a touch lower. Can you sort of assess where you came into this meeting and where you are today and the level of bullishness you have around JPM shares?
Well, look, this was JPMorgan's annual investor day, and I think they showed that they are the LeBron James of banking because they're good at both offense and defense. On offense, they have record investment spend, but you know what, Scott? We still forecast record revenues, and for those revenues to grow more than twice as fast as expenses. So that's the whole medium-term story here. And there's a lot of business coming to JPMorgan. I mean, in the consumer business, they've gotten deposits in Silicon Valley. Their record spend on marketing for credit cards. And in the wholesale business, a lot of that business that's done at regional banks might not be done there as much anymore. That's flowing to JPMorgan. So I feel great about the offense. When it comes to defense, they have excess capital, excess liquidity, and excess reserves for problem loans.
Right.
They've already reserved for almost 6% unemployment. The credit card loss guidance is the same, no change there. CRE, office, it's a fraction of what is for other banks. So the offense is good, the defense is good. The main, short-term negative would be they guided lower for capital market revenues in the second quarter. So we're talking nickels and dimes here when they should earn between $14 and $15 this year. So that's a tweak. At our conference last week in Chicago, we had over 70 financial firms and many banks, and Goldman Sachs at our conference said they see green shoots. Today, JPMorgan guides a little bit lower for capital markets. We'll see, as goes the economy, as goes the geopolitical environment, as goes the debt ceiling, as goes capital markets. So it's kind of like predicting the weather. So I'm still as bullish as I was going into this meeting. There are certainly some extra positives, but that tweak for the second quarter in the immediate term wasn't expected.
I just also wondering about Diamond's own comments about, be prepared for interest rates to go even higher. Throws out 6 to 7% for Fed funds. That is not a great scenario in any way, either for markets or for the economy, is it?
Well, JPMorgan is structurally positioned about as well as they've ever been structured. But cyclically, you have all sorts of headwinds, from interest rates to inflation to expenses to normalizing credit costs and changes in regulation. And Jamie Dimon is the worrier in chief. He sets a tone for risk management. And by setting that tone, he's alerting, the few 100,000 employees to also look out. So he said he is more worried about quantitative tightening than anybody in this room, pretty much more than anybody else. So that's his job, is to set a tone for being prepared for what people might not be prepared for. So I think culturally that's really good. But you're right, cyclically, it's a reminder that there's still some tail risk, and it's still a flammable situation depending on the course of the economy.
You also think that they were a bit conservative. Is that correct with their assessment of what First Republic is going to mean for them in the near term as well?
Yeah, First Republic really accelerated their expansion strategy with the affluent consumer sector in the United States. They said a couple times we were conservative. So it's not me saying it. They said they were conservative. So I think that might add a little bit more to earnings. So net, maybe a little more from First Republic, maybe a little bit less on trading. You're still, we're at $14.50 for EPS this year. They're trading at 9.5 times earnings. JPMorgan, best-in-class global bulge bracket bank, is trading at 1/2 the price to earnings multiple of the general stock market.